Hello there, Jays, and welcome back to another video. Before we get into this video, make sure you guys like, comment, share, and subscribe to my channel. Today we're going to talk about the pros and cons of an ETF and index fund, also going into depth of what the similarities and differences.
Have you ever wondered about the difference between ETFs and index funds? Well, today we're going to break it down for you in simple terms. First things first, ETFs, or exchange-traded funds, are investment funds traded on stock exchanges. Picture it like a basket of securities that you can buy or sell through a brokerage firm on a stock exchange. ETFs are designed to track the performance of a specific index, sector, commodity, or asset class. They can include everything from individual stocks to bonds or even real estate. On the other hand, we have index funds. These are mutual funds, or ETFs, that are designed to track the performance of a specific market index. In other words, index funds are built to mimic the performance of market benchmarks like the S&P 500 or the Dow Jones Industrial Average. Now let's talk about how they work. When you invest in an ETF or an index fund, you're essentially buying a piece of a vast portfolio that includes numerous individual stocks or bonds. Instead of picking and choosing individual investments, this approach allows you to spread your risk across a wide range of assets. So, what are the main differences between ETFs and index funds? The most significant difference lies in how they are traded. ETFs are traded like individual stocks, meaning their prices can fluctuate throughout the day. You can also buy and sell ETFs at any time during the trading day. On the contrary, the index funds are traded only at the end of the trading day at their net asset value. This means you can only buy or sell index funds once per day after the markets have closed. Another key difference is that ETFs generally have lower minimum investment requirements compared to index funds, making them a popular choice for those starting on their investment journey. Now that we've covered the basics, let's delve deeper into the pros and cons of each. So what are the advantages and disadvantages of ETFs? Let's dive right in and start with the positives. One of the main advantages of ETFs is their flexibility. Unlike mutual funds, which only trade at the end of the day, ETFs can be bought and sold throughout the trading day, just like individual stocks. This allows investors to respond more quickly to market fluctuations. Another key benefit is accessibility. ETFs can be purchased for the price of a single share, making them an affordable choice for many investors. Plus, many ETFs are designed to track specific indexes, sectors, or commodities, providing a straightforward way to gain exposure to a variety of markets. And let's not forget about diversification. By holding a range of different assets, ETFs can help spread risk. For instance, an ETF that tracks a broad market index will hold shares in hundreds, if not thousands, of different companies. This makes them a good option for those seeking to diversify their portfolio. But of course, ETFs are not without their downsides. One potential pitfall is the risk of pricing errors. Because ETFs trade like stocks, their price can sometimes deviate from the value of the underlying assets. And then there are the brokerage fees. Every time you buy or sell an ETF, you'll have to pay a brokerage commission. These costs can add up, particularly for those who trade frequently. ETFs certainly have their benefits and drawbacks, but what about index funds? Let's take a look at the other side of the coin, the pros and cons of index funds. Starting with the pros, index funds are celebrated for their low costs. With fewer transactions compared to actively managed funds, they incur less fees, making them a cost-efficient option for investors. Next, there's simplicity. Index funds are straightforward. They track an index and that's it. There's no need to understand complex investment strategies or analyze market trends. This makes them an ideal choice for beginners or those who prefer a hands-off approach to investing. Then there's predictability. Since index funds mirror a specific index, you can expect them to perform in line with that index. This allows for a level of predictability which can be comforting for risk-averse investors. However, index funds do come with their cons. First, there's a lack of flexibility. Unlike actively managed funds, Index funds don't have the leeway to adapt to market changes quickly. They are bound to their respective index, which can be a disadvantage during volatile market conditions. Secondly, there's the potential for underperformance. While it's true that index funds typically match the performance of their index, keep in mind that means they'll never outperform it. If the index they're tracking isn't doing well, neither will the index fund. It seems both ETFs and index funds have their own unique advantages and disadvantages. So when it comes to ETFs versus index funds, which one should you choose? Let's take a quick trip down memory lane to recap what we've learned. ETFs, or exchange-traded funds, are investment funds that are traded on stock exchanges, much like individual stocks. They offer a great deal of flexibility, allowing you to buy and sell shares throughout the trading day at fluctuating prices. They also provide the benefit of lower minimum investment requirements, making them an attractive option for beginner investors or those with less capital to invest. On the other side of the coin, we have index funds. These are mutual funds, or ETFs, that aim to replicate the performance of a specific index. They're known for their simplicity and low costs, offering a passive investment strategy that can be a great way to diversify your portfolio. Unlike ETFs, index funds are only bought and sold once a day after the market closes at the net asset value price. So, when might you want to invest in ETFs or index funds? If you're looking for flexibility and the ability to make tactical trades, ETFs could be your game. However, if you're a fan of the set-it-and-forget-it investment strategy, index funds might be more your speed. But remember, there's no one-size-fits-all answer here. The choice between ETFs and index funds depends heavily on your individual financial goals, risk tolerance, and investment strategy. Are you looking for growth or income? How much risk are you willing to take on? How active do you want to be in managing your investments? These are all questions you'll need to consider. Lastly, it's crucial to remember that both ETFs and index funds are tools in your investment toolkit. They each have their strengths and can complement each other in a well-rounded portfolio. It's not necessarily an either-or decision. You may find that a combination of both suits your needs best. Ultimately, the decision between ETFs and index funds should align with your investment goals and strategy. And with that, we wrap up our deep dive into ETFs and index funds. Here's to making informed investment decisions.